Buffett likely came to know Occidental through the 2019 Anadarko takeover fight, when Occidental's CEO Vicki Hollub flew to Omaha and asked Berkshire for $10 billion of financing to help beat Chevron's bid. That deal gave Buffett preferred shares and warrants, and it also started the relationship that led to Berkshire buying common stock later. In 2019, Occidental was trying to buy Anadarko Petroleum, and Buffett stepped in with financing at a critical point. That was the first major public link between Buffett and OXY, and it put him in direct contact with Occidental's management and business model. Buffett later said he liked Occidental's position in the Permian Basin and its cash generation potential, while also emphasizing that oil investments depend heavily on future oil prices. He also praised CEO Vicki Hollub's discipline and said he read her earnings call remarks closely. Warren Buffett values Occidental Petroleum's dominant position in the Permian Basin, the most prolific and lowest-cost oil region in the U.S., which spans Texas and New Mexico and offers decades of inventory for efficient drilling. This scale enables economies that drive strong, free cash flow even in volatile oil markets, aligning with his preference for predictable cash generators over speculative ventures. Occidental controls about 2.9 million acres there post-Anadarko and Crown Rock deals, with top-tier well productivity, 23% of the basin's best wells despite just 4% of total drilling, and tech that minimizes decline rates for sustained output. Buffett sees this as a moat, especially versus higher-cost peers. Vicki Hollub earned Buffett's praise for capital discipline. She led the bold 55B Anadarko buy but followed with debt reduction, selling OxyChem for 9.7B, avoiding risky long-cycle projects, and prioritizing shareholder returns like buybacks. Her focus on Permian efficiency and cash discipline turned Oxy around post-2019 leverage, though she's transitioning out in 2026. Warren Buffett typically favors companies with predictable, compounding operating income growth, like Coca-Cola or See's Candies, but Occidental Petroleum, OXY, is cyclical due to oil prices, so he buys anyway for its asymmetric upside and cash flow traits that fit his long-term value framework. Buffett prioritizes free cash flow, FCF, over reported operating income, and OXY excels here. It generated 4.3B FCF in 2024, ranks high in oil price sensitivity, and yields strong cash even at moderate prices, up to 37% FCF yield in high oil scenarios. This funds debt paydown, dividends, 4-share YTD, and buybacks, mimicking the capital returns he loves elsewhere. OXY's 2.9 NEMI-acre Permian dominance offers low-cost, high-productivity drilling, 23% of basin's best wells with just 4% of rigs, giving decades of inventory without risky long-cycle bets. Buffett calls it a bet on Permian being what it's cracked up to be, plus long-term oil demand, trading at cheap multiples 5-7x earnings. He trusts Vicki Hollub's discipline, debt cuts post-Anadarko Crown Rock, efficiency gains, 2B plus its cost savings, and Berkshire's 8% preferred yield plus warrants add locked-in returns. Did 3B cash windfall YTD on stake. At 29% ownership, it's a leveraged oil play he can hold forever if prices average well. Warren Buffett applies his core value investing lens to oil companies, prioritizing free cash flow generation, reserve quality, and management discipline over volatile earnings growth. He seeks firms that thrive across oil price cycles with low-cost assets and strong returns on capital. Buffett stresses FCF as the lifeblood, favoring producers like Occidental that generate robust cash even at 50-70 barrel oil, key for dividends, debt reduction, and buybacks. OXY's high FCF yield, up to 37% in favorable scenarios, fits this, funding returns without dilution. He values proven, low-cost reserves, e.g., Permian Basin inventory lasting decades, and high return on invested capital, ROIC 12%, signaling durable competitive edges like scale and tech that beat peers. Debt levels matter too. Stable leverage ensures survival in downturns. Buffett bets on disciplined leaders who allocate capital wisely amid cycles, buying when stocks trade below intrinsic value. For oil, he eyes long-term demand hedges and relative valuation versus majors like Chevron. Warren Buffett's average purchase price for Occidental Petroleum, OXY stock, is around $51 to $54 per share, based on Berkshire Hathaway's cumulative buys, totaling over 280 million shares since 2019, e.g., $51.76 weighted average per Guru Focus data through early 2025. He added shares in Q4 2024 at 50.46 and Q1 2025 at 48.82, often during dips below $50, building the stake methodically amid oil volatility. Even at 45.47 levels in early 2025, his cost basis held above current trading then. As of early April 2026, OXY trades near $60-$65 after a 50% plus rally tied to rapid oil price gains, geopolitical tensions pushing WTI toward 80 plus. This lifts PE to 38.45x, well above Buffett's typical thresholds and peers, 15x industry average, signaling expensive short-term versus his low-cost entries. Yet Buffett holds near 29% stake for Permian FCF resilience and long-term oil demand, not near-term multiples. Want to dive deeper into Chevron and its powerhouse rival ExxonMobil? Drop a comment below and subscribe. You'll get weekly updates tracking their metrics, strategies, and Buffett-style insights.